Hey everybody, hello ladies and gentlemen. This is me, Darius Anucauskas from Markets.com, and I just wanted to quickly share with you a little piece on gold here. I think that gold is on everybody's mind lately, especially given the fact that we've reached the 3,500 yesterday. But look, about all this a little bit more in a bit. First, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll also give you a few seconds to read the rest, but yep, as you know, gold has been on fire lately, and yeah, it has been, going higher and higher. But we saw a reversal yesterday, so I'll pick up on that in a bit. Also, just a quick mentioning of our Markets.com. Oh, is it the screen like this? There we go. Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at what's happening here with gold. So, this is a daily chart that I'm looking at, and previously I talked about this. And I said, look, in order to kind of find out where we could go next, I'm applying my Fibonacci extension here, and I'm drawing this one from the lowest point of October of 2023 to the, oh well, actually it was better than looking on the monthly chart. Actually, let me show you what I'm talking about here. So this is the one here, so the lowest point of October of 2023, then drawn to the highest point of October of 2024, and then the lowest point of November of 2024. So look, of course, this is all in a way subjective. However, we're trying to find some sort of common sense here, and well, at least this is helping us to do that a little bit. Now, looking at this monthly chart, you can see that we have reached that 3,300 easily, and then yes, we reached the 3,500, although the 100% was here at 3,516. Well, just fell shy by $16 to reach that, right? But look, in general, we tested the psychological 3,500. Now we saw, I mean, yesterday we hit that in the morning, and then we started selling off very quickly. We started selling off. Of course, the market hit us yesterday with some positive news, and everybody's like, "Oh, we're not gonna." Oh, excuse me. Sorry, I'm a little bit with a cold. So the market was like, "Oh, we're not getting rid of Jerome Powell. We're looking at the that 145% tariff on China. We're gonna redo that, and also yeah, and also Tesla's Musk said that he's gonna maybe try to focus more on Tesla rather than Doge, right? Department of Government Efficiency. So and in a way, we got hit with this positive news, and everybody's like, okay, great. So that's why gold is selling off. However, I part of it is true, of course. Maybe because the market is seen as the as currently not the place to be in, and everybody was jumping into gold and trying to park their money. Um, However, like, okay, we could see the stock market rallying a little bit. However, as I said before in my previous videos, in my morning webinars, which you can always join live or have a look at the recorded session, what I said before that, look, yes, we rallied, but I think that there could be some profit taking by countries. For example, those countries who have bought a lot of gold recently, maybe they understand that the economy could go sour and they need cash. So cash is king in a way. So they need cash, they need to do something, and the best way is to tap in a little bit into your gold reserves. So in order to create, a little bit of cash here, a little bit of profit. So you start selling, and basically you can, yourself that you can, come back at any time later on. Later, you can buy some more gold, but at this point, you need some cash. You need to support the economy. There are different things politically brewing in the in the world. So that's why everybody needs cash. So you cannot really hold gold for too long. We need to kind of benefit from it. So, and that's what maybe we're seeing. So if we do if we do apply Fibonacci retracement, we use this Fibonacci extension. We can get rid of it now. Now we can use the Fibonacci retracement, but only on this one. So only on the from the lowest point of April to the highest point of April. And I think that something tells me that 3,500 might stay the highest point of this month. And looking at this picture this morning, we already did that 38.2 here. So if you're looking for some lower levels, I think it's safe to say that it's better to wait for a drop below the current lowest point of today, which is roughly around. Let me just grab this line here. Roughly around 3,291, 92 zone. So somewhere there. If we do clear that, we also clear the 38.2, and we could then aim for the 50% retracement here on the Fibonacci, which is on my chart roughly around the 3,228. Again, maybe in your chart this could be a little bit in a different place, but roughly around there. But if you're looking for some higher levels, in my opinion, the best option here is to just kind of wait for a push back above the somewhere back above this 3,371 territory, which is the 23.6% retracement on the Fibonacci. And then yes, we could go a little bit higher, but you need to then be very careful, because if we start failing to reach the current all-time high, well, this could be actually an indication that maybe it's time for a bit of a retracement, like a larger retracement. So, long story short, if you're wondering what to do right now, or to jump on the bandwagon and just start selling, I would say, unfortunately, if you've missed this turn, I would say wait a little bit, because the better option right now is to wait for a drop below the 3,291 zone, because again, that would confirm a forthcoming lower low and could open the door towards this 50% retracement. But for the upside, I think that the shorter kind of option here for the upside is, like I said, to wait for a push back of the 23.6, but then be very careful, because maybe we could get a little hold up somewhere here near the 3,424, or maybe, okay, if it surpasses that, that's absolutely fine. Then we can, you can basically start drawing Fibonacci levels on the other side, from the other side, right? You can basically draw it this way. But again, if you're comfortable with that, because again, it's a little bit tricky here, I would say. So just maybe a little bit overdoing that. So look, I would say don't rush at this point. If you've missed the drop, about this $200 drop, look, there will be an opportunity, in my opinion, but we need to figure out what's going to happen today with this candle. Are we going to stay here, or in general, what's going to happen with this month? Because looking at this candle, I mean, let me just get rid of the Fibonacci. Looking at this candle here, I mean, look, it's a beautiful shaped candle here, which with almost equal levels, almost equal tails here, wicks. So the next candle, which is going to start forming in May, maybe we could, like I said, maybe we could see the May candle surging here again, closer to the 3,500. But if we struggle to overcome this barrier, or even better in my opinion, if we overshoot that, we create a new all-time high, but at the end of May we struggle to stay below this hurdle, below the current all-time high at around 3,500, well, that could maybe signal a bit of a nice reversal going into June and July. But again, like I said, I know it's not a short-term outlook here, but well, the short-term outlook is when I was looking at this daily chart. But still, for you to kind of understand the broader picture, I think that's by looking at this monthly chart, I think that could be quite useful. So, in general, continue monitoring the situation with the what's happening with, what news are we getting from the White House. Again, I strongly say to everybody, look, yes, the conventional idea of like when the markets turn sour, gold rallies. In a way, that is true, but sometimes. So this time we had a great kind of say great example. Yes, where the markets were selling off, and not sorry, not but gold was still, gold was rallying. But if the stock market now recovers, maybe we could see a little bit of a retracement. However, if we start seeing reports in in the market, or in the headlines, in the news, that let's for example, there's another possible tariff war. We're going back to square one. Then we need to look at countries. We need to look at these major countries which have like huge stockpiles of gold. Are they not gonna start unwinding some of that gold in order to, like I said, create a little bit more cash? Again, we might see gold rallying, but then when we reach a certain point, again, everybody's talking about 4,000 now. Is it possible? I think it is possible. However, let's go step by step. Let's not rush into things. Let's go. We clear the 3,500, then we can start dreaming about the 4,000 level. But again, once again, as I keep on saying, step by step. So look, I hope this helps. I don't know if you have a different opinion on gold. Just let me know in the comments what you think. I would really love to know. But yeah, thank you very much for watching and listening. I just wanted to share my little piece here on gold. Hope this helps, and yeah, I'll see you later for a next update, next economic update. And bye for now, ladies and gentlemen. Bye for now.